The September crash has been a hot topic lately. A lot of investors are worried, while some take advantage of it. So what's the deal with the September market crash? Should you be worried about it? Or can you actually benefit from it? Welcome to Financial Literacy. Here, we are dedicated and passionate about bringing you nothing but honest and straightforward facts about your money. We will help you take control of your finances and get you to the next level. Beginners or experienced, this is your one-stop shop for all things financial literacy. The September effect, as some experts call it, is the phenomenon where the stock market tends to experience a decline during September. There are a few theories behind this interesting trend. One belief is that individual investors sell their stocks to offset the expenses of their children's schooling. Another theory suggests that market psychology plays a role, as investors expect the September effect and their negative sentiment aligns with those expectations. Institutional investors also join the party by selling their stocks to lock in profits before the year end. But wait a minute! Let's look into the reality of the September effect before you start to panic and consider selling everything. The majority of economists dismiss it as irrelevant, contending that it is only a historical oddity rather than a genuine causal relationship. And even if it did once exist, traders who are aware of the oddity now behave in a way that effectively eliminates it. They've developed into quite the magicians, don't you think? Disruptions top the list of September's events. September 1869 saw the first Black Friday, which left many would-be millionaires with nothing but regrets. Also, don't forget to take into account the 1929 stock market crisis, which began to unravel in September. There's no doubt those were happy and exciting times. The intriguing part starts here. Despite how terrifying the market fall of September may sound, it may present a chance for financial advantage. The savvy investor Warren Buffett makes the analogy between the price of hamburgers and the stock market. We sing as the hamburgers come out. So instead of continuing to hold that belief, why not change it and sing along? When there is less rivalry, a declining market may work in your favor. Just think about it. So the next time September rolls around and you hear whispers of the September market crash, remember that it might not be as bad as it seems. Don't give in to fear and panic, but instead keep an eye out for potential opportunities. Who knows, you might just transform financial losses into personal gains. Now, let me ask you a question. What comes first on your mind when you hear the word September? Comment it down below. September is the month of falling leaves and cozy sweaters. And stock market crashes? Yup, you heard it. Stock market crashes. I don't mean to scare you again, but let's find out if this September effect is relevant to you. According to some beliefs, individual investors sell off their stocks in September to cover the ever-increasing costs of their children's education. I mean, who needs stocks when you can have textbooks, right? There is also a theory that the September effect is purely psychological. Investors expect the market to take a hit in September, so they all jump on the bandwagon and sell their stocks as well. It's like a self-fulfilling prophecy, but with a lot less magic and a lot more market psychology. But wait just a moment. Despite these hypotheses, most economists disregard the September effect as irrelevant. They contend that if it ever existed, traders who were aware of it would have changed their trading tactics to eliminate it in actual trading. You think you've discovered a pattern in the market, but it turns out to be nothing more than a historical abnormality in the data. What are your thoughts on this one? Let us know. Now hold up. Let's not forget to mention those cunning institutional investors as well. They might be involved in this September shift as well. They grasp the chance to lock in some gains before the year ends as the third quarter comes to a finish. Like snatching the last piece of pizza at a party, it's calculated and incredibly fulfilling. There's still more though. To take advantage of tax losses, many sizable mutual funds sell off their holdings at the end of the quarter. It's similar to turning financial losses into profits for the individual or turning lemons into lemonade in this case. Who knew that a financial setback may have a positive outcome? Okay, so if you've experienced financial losses, especially during September, you don't have to worry too much at all. It happens to all of us, and because we want you to get the best out of your financial journey, here's a little secret. There is actually a way to turn your losses into gains, so listen very closely. You see, during September, there seems to be a trend of market downturns. Some blame it on investors trying to offset schooling costs, while others believe it's just a psychological effect. But here's what you need to know. Economists largely discount the September effect as irrelevant. They say it's just a historical quirk, not a causative factor. And guess what? Traders with knowledge of this anomaly now act in a way that makes it disappear in practice. So much for the September effect, right? But wait, there's more. Let's not forget the infamous October effect. It's another market anomaly, suggesting that October is a negative month for stocks. However, despite historical events like Black Tuesday and Black Monday, October's overall history is net positive. It seems like the stock market loves to play mind games with us. Therefore, my buddy, it's time for you to change the way you see things. Avoid allowing a market collapse to weigh on you. Make the most of it by planning forward and embracing the situation. Who knows, you might even end up with more money than you started with. And that is what we wanted in the first place. Turning financial losses into personal benefits is the key to success. Keep in mind that the stock market has ups and downs, much like a roller coaster. Are you willing to surf the waves and succeed? That is the actual query. You have the option. So there you have it! When it comes to market crashes, it's easy to become a little uneasy. But hey, try looking at it from different angles. Think about riding a roller coaster. You should approach these market anomalies with enthusiasm because after all, there may be some potential serious gains. Sure, it's challenging, but they also bring opportunities, especially for the smart and prepared ones. If you are a smart investor, you know the uncertainty the stock market has. So, you have to be diligent and carefully analyze everything and ensure proper risk management with your decisions. And let's keep it real, not all market crashes lead to immediate profits. Sometimes, success requires a healthy dose of patience and strategic planning. In the end, instead of letting fear and uncertainty rule the day during a market crash, let's face it with some good old enthusiasm and optimism. By embracing the challenges and sticking to a well-defined investment strategy, we can ride out these turbulent times and maybe, just maybe, achieve some serious financial success. Thank you for watching. If you like this video, please don't forget to give a thumbs up, comment, and hit that notification bell so you don't miss out on our following videos. Make it rain, you guys!